Hello subscribers, today is Friday, September 23rd, 2022. This is a market recap for MasterChartsTrading.com. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. The way YouTube works is the more likes the video receives, the more people will actually see it and benefit from this video. So please, again, don't forget to hit the like button. It's a very eventful week, and especially today, Friday. Dow hit 52-week lows. Other indices are close behind. The high yield bonds, I was warning about this, broke support, and this is quite bad for stocks. We will look at a pretty obvious bearish divergence for stocks and what it could mean in the longer term. We're talking about a month to maybe a half a year or so. What that could mean for stocks. Dollar also broke to new highs as some of the other currencies broke to 20-plus year lows. And gold also broke support and could collapse at least 20%, possibly more. Oil also could be headed quite significantly lower in the 60s, 70s dollar levels, and Bitcoin could break support at any minute, and I think it will just collapse again to like nothing or possibly negative. If you are a subscriber, stay tuned. We will cover all of this various stocks. You can see here Biotech, Brazil, Blue Apron, Transocean, Sunrun, Plug Power, etc. So stay tuned for that. If you are not yet a subscriber, consider going to MasterChartsTrading.com and sign up for one of the products. I have the trading indicators, which I will discuss in the today's video, and I have the newsletter, which I send out daily alerts and the weekly special members only video. So sign up for that. Right, let's look at S&P 500. This S&P 500 E-mini futures on TradingView.com. Symbol is ES1 exclamation point. These are continuous futures. I prefer them to S&P 500 ETF SPY because it gives much better picture of what's happening with stocks. So looking at this chart, we have four horizontal lines on this chart. We have the green, blue, red, and yellow lines. You can see them on this chart, and these are my indicators, support resistance trading indicators, which I use for trading, and this is what my subscribers are also using for trading. So how do we use them? So number one, for stocks such as S&P 500, in order for us to declare a bear market or a downtrend, we need to get a close, where I'm hovering right now, below this yellow support resistance line. So this actually occurred on April 29th of this year, 2022. And at that point we said, okay, the stocks are no longer in an uptrend, they are now in a downtrend. And at that point we're thinking about selling stocks short. And where do we want to sell them short? At the red support resistance line. So stocks made the close below the yellow support resistance line and then bounce towards the red line. You can see a couple of opportunities here back in June that were successful into late June. Then we had a significant rally, and this is what's called a bear market rally. And I kept saying the same thing, that we're still in a bear market. We're still in a bear market until or when we close above this blue support resistance line, which still is at 4370. We got very close. In fact, here in mid-August, we were super close, but we didn't make it. And we still remained in a bear market. We rolled over and we started getting what's called short signals. So a short signal occurs when stock closes above this red support resistance line and then closes below it. Or we can make a high above it and then close below it. The important thing is we make at least a high and then a close below this red support resistance line. We had two beautiful signals. The last one was just an enormous candlestick right there on 13th of September. And throughout this past 2 weeks, we basically did nothing but sold off. In fact, today we came so close to making new lows. This is S&P 500. We came extremely close to breaking this June lows. We closed just slightly above the previous lows. So I don't know. I mean, anything is possible, but this candle just doesn't look good. I'm gonna zoom in a little bit. This is not a bullish candle. I mean, it wants to be a hammer candlestick. A hammer candlestick occurs, like for example, this green candlestick. You can say it's a hammer candlestick. It occurs when prices collapse during the day and then rally towards the end. But here we see that prices did collapse, but they rallied quite not a lot. So this is not exactly a hammer candlestick, but it's trying to. I think there was some buying because I think people are saying that, okay, so we're so close to lows, my risk, if I buy here, my risk would be, new lows. In other words, I buy here, if we make new lows, I exit. So that's how gap down occurs, because everybody wants to exit. And so if everybody exits, then who is going to be buying? And that's why there's sometimes no price. After we get to these lows, we can just boom, gap down, and it could be a significant gap. So let's see what happens Monday, basically, or rather Sunday night. But overall, this is clearly a downtrend, bearish chart. So for S&P 500, we didn't make new low. However, if we look at Dow Jones, this is Dow Jones futures, we did make new lows. So today we saw a 52-week low. Additionally, we closed at new 52-week low. So we did indeed break these lows from 17th of June. You can kind of see that similar pattern on this chart, just not exactly the same, but quite close. Additionally, I wanted to point this out. Notice what happened right there on 16th of August when we had this big bear market rally. Look where it ended. It touched this blue support resistance line. I'm not making it up. These lines are not drawn. These lines are actual indicators. You can see them. I can get rid of them or I can turn them on. So they're not drawn in. This is mathematically calculated. So the prices came up all the way to the blue support resistance line. They got rejected there, and then we had several just staircase collapses. Finally, today we actually closed at new lows and made a new 52-week low. So when such major indexes as Dow Jones make a new low, most likely the rest of them will follow. So that's why I'm expecting S&P to continue lower, possibly gap down on Sunday night. Again, overall, this is a bearish chart, no question about it. Here's NASDAQ. So NASDAQ slightly different picture because we started bear market for NASDAQ a little bit earlier, actually in March of this year, whereas for S&P, the bear market started in April. So NASDAQ actually had a even earlier start. Also bear market rally, notice, into March, and then roll over right there, short signal, beautiful, and 8th of April right there, huge collapse. Again, same thing, bear market rally from June lows into August, and then a couple of nice short signals, and another staircase lower, stair steps lower. So again, we're very close to new lows. I think we will make new lows. It's just a matter of time. And during bear market, we make new lows. We don't make new highs. And looking at Russell 2000, this one actually started even earlier. So notice where the bear market delineation started, right there, January 18th. How do I know? My definition of a bear market is using just the lines. This is support resistance lines, again available for TradingView, but you have to sign up on my site first and I'll open the door for you. So right there where I'm hovering, 18th of January, the stock, or in this case Russell 2000 index, closed below the yellow support resistance line. This is a bear market downtrend, beginning of a downtrend, and we have opportunities to sell short. You can see where the downward facing arrows are. This is a lower risk entry basically, and then you can see significant move lower. Again, a low in June, bear market rally into August, and two opportunities or several opportunities to sell short, and a continuation lower. So once again, we're super close to new lows. This candle today is not bullish by any means, so I think Sunday night we could actually see a gap below these lows. Gap down meaning we open, actually there's no transactions between today's closing price at 1687 and let's say Monday or Sunday night open at, like, let's say they open at 1611. Just gap down. It's possible, quite likely in fact. So all of this was sort of predicted, and I kept talking about the high yield bonds. So again, why do I care about high yield bonds? And I want to go to weekly chart for high yield bonds. So weekly, what does that mean? Weekly chart means that each candlestick, each of these green or red funny looking things, is a 1 week's worth of activity. So looking at this junk JNK or high yield bonds fund, and on the bottom here we can see yellow. In yellow it is called a correlation. So correlation to the S&P 500. Correlations meaning how closely does one security, in this case high yield bonds, how closely does it follow S&P 500, and there you can see that it follows it quite closely. So whatever S&P is doing, most of the time high yield bonds will be doing very much the same thing. And this is why I keep talking about high yield bonds as an important indicator of where stocks are going. So looking at this chart, first of all, the bear market for junk debt started around the same time as the Russell 2000 small caps index, where I'm hovering on 18th of January of this year, so beginning of the year. Now, what happened right there today, I'm gonna go to daily chart now. So daily again, meaning that each candlestick is a day's worth of activity. And looking at this chart, we actually broke support yesterday. So what does that mean we broke support? So this line right there, the purple line, I just drew it in. This is actually drawn in. So what I did is I looked at the lows from June 13. There was another low from July 5th. And I was looking at where would the price be basically if I drew a line through these lows. And this is what I got. So yesterday we actually made a new low and we almost closed below it, but today we gapped down. So this is what I mean by gap down. So this is what I'm expecting possibly for S&P 500 Sunday, Monday. Notice that yesterday price was at 90.04, but today we opened at 89.27, and there was no transaction. Well, there was a little bit of transactions because we rallied a little bit during the day, but this is what's called an opening gap. This is unequivocally a broken support because we actually closed below it. Notice the support is broken because we closed below it. So I think that the fact that high yield bonds are leading the stock market lower is also important, as I just showed, because of the correlations. So in this case, the junk debt seems to be leading the stock market lower. What's happening right now is that we're approaching pandemic lows. So this is a pandemic low from March of 2020. And you can see that we came a huge way. I mean, we were way up here at 110, and we're now at 88. So that's like 20% drop, if I'm not mistaken. we're already around 20% down, and so if we get to pandemic lows, we'll be about 25% down. Now, the way things are going, I don't know if these pandemic lows are gonna hold. So I'm just gonna briefly show you Hong Kong market, and notice what happened for Hong Kong market. There's the pandemic low from 2020. It broke it. You can see we're way below it, and we're now at 10-year low. So I think something similar is going to happen to junk debt, and if that happens, most likely stocks will do the same thing. So stocks most likely will be continuing lower. So here's S&P 500. If we look on the weekly time frame for S&P 500, notice where the pandemic low is. It is way down there still. We're still 40% away from it. Okay. Now again, if junk debt is a leading indicator and we're already approaching those lows, and S&P 500 is about to, break this support from June, I think we can easily continue down another 40%. So that's we're looking at. We're currently at 3,700. We could easily get down to 2,200, and I don't know if that's going to be the end of it. So people have been writing to me saying that if that happens, then S&P, rather the United States and the world, for that matter, will most likely be in deep recession. And I answered that it could be a deep depression. That is also a possibility. Stock markets represent, sentiment of things to come, and yes, that is a possibility. So, you need to be basically prepared for many eventualities. What if you are laid off from work? Are you able to support yourself? What if you don't have a place to live? Are you able to survive somehow until things turn around? So these are really nasty questions, but people do need to ask them. And yes, with the war, with the shortages of food now, and general instability in the world, the stock market is basically acting as possibly a leading indicator of things to come, and especially the high yield bonds. I think they're acting as a leading indicator of things to come, because we're already approaching pandemic lows, and I don't know if they're gonna hold. Like I said, if we look at Hong Kong market, it just burst through it and continued lower. So I wanted to show another point of view why I have quite a bearish outlook, on stocks right now. And we're looking currently at what is called a New York Stock Exchange Composite Advanced Decline Volume Line. Okay, so it's a mouthful. If you go to StockCharts.com, this is not on TradingView, StockCharts.com, click on Chart School. This is a free site, and then click on Find Advanced Decline. You can read how it's calculated. I don't have time to go into it, but this is one of my favorite market breadth indicators. So what does that mean? In market breadth, meaning that, market breadth means how broad is the participation in stock market advance. Are a lot of stocks going up at the same time, or a lot of stocks going down at the same time? So in this case, this line right here, this is New York Stock Exchange Composite Advanced Decline Cumulative Line. You can see what's happening right now. We actually today made a new low, and look at how significant that low is today. Now looking at S&P 500 SPX right there on the bottom, we can see that we actually have not yet made a new low. So we're like flat. And when this is happening, this is what's called a bearish divergence. In other words, the number or volume of stocks that are going down is outpacing the actual price, if that makes any sense. Now, just look at this chart right now and notice that we have dropped to a level that is not even on this chart, and this is going back a year and a half. Notice 1 year and 4 months. So I have to go back around 3.5 years to see where that low is. So okay, so I'm gonna turn on the inspect button. So right now this level is exactly around the lows from the pandemic low. Okay, so again, another possibility or another part of the puzzle is that I think the market breadth is already at pandemic low, but the price has not yet reached there. So there is a good chance we're going to continue lower towards that pandemic low. So this is exactly another reason why I think that we have more downside, and I don't think this is the bottom. All right, let's switch gears. So now we're looking at dollar currency index on TradingView.com. It is called symbol DXY. So this one, again, an unequivocally bullish chart, unequivocally uptrend, and I called this one using nothing but my indicators. Okay, and again, you can clearly see it. I'm just gonna hide for a second my annotations, but you can on this chart clearly see where the breakout occurred, where I'm hovering right now. So before, I'm gonna go back, and we're right now back in June of 2021. Okay, something is happening, some kind of price action. You know, we're at the lows here, and price started going up a little bit, and then there is the breakout on July 13th, 2021. Okay, so that's actually all I needed to know to say, okay, now we need to start buying. We no longer want to be selling short the dollar. So back in July of 2021, I sent this to my subscribers. If you go back to my videos, I have YouTube videos, I started talking about buying the dollar back then, and we started buying the dollar. You know, you can do it via various forex currencies, for example, euro versus US dollar. And this is still continuous to today. Very strong move, enormous. For currencies to move this much is huge. Look how big this move was. And again, today we made a new high. So we can actually go look at the euro. So this is euro versus US dollar, and obviously it's the opposite, because if the dollar is going up, then euro is going down, and there's the breakdown and the possibility. So first of all, there's the entry into a downtrend for euro versus US dollar right there. It occurred. I can actually zoom in and tell you exactly the date. It's right there. So the euro versus US dollar started going down, or began a downtrend according to the system. But you can see it's a clearly very easy system to follow. This is July 2021. Then you had several opportunities to sell it short, where you sell short at the red line. That's all. So notice, if you are trading forex, especially this last opportunity, which was back in September of 2021, was gigantic. I mean, if you held on till now, let me see how many pips. If you trade forex, you will realize that this is insane amount of pips. This is 2,000 pips. Okay, this is 18% move. Usually, when you trade forex, you trade on like 5-minute chart. You know, on 5-minute chart, so you can trade using my indicators. So, for example, here's a 5-minute chart, and if you shorted it right there, you can clearly see it. That's about you know, it's a nice move. It's 180 pips, and especially with leverage, this is a significant move. Okay, but 2,000 pip move, yeah, it's sweet. So yeah, if you got in there, congratulations. And basically, I would keep short. Still, looks like we're gonna continue lower. It does not look done. What does it all mean? So if the dollar is going up, that means the currency pair, also known as gold divided by US dollar, is doing the opposite. So dollar is pressuring this currency pair lower, or in other words, if this lower part of the equation, XAU divided by USD, if the lower part of the equation is getting bigger, then it's pulling this currency pair lower. And it is exactly what's happening. We had multiple opportunities to sell short. You can see the downward facing arrows, and it just keeps going. So again, if you open the short, I actually opened the short, but I closed it like here on 14th of July, which is still a nice move, but notice if I didn't, it would have been even better now. It's always like this, right? Now, looking at gold, this is a daily chart, so it doesn't show the whole picture. Let's look at the weekly chart of gold. And weekly chart of gold is even worse, because notice that, again, this is I drew this line in, this white line. It simply was the lows from 2021 and the latest low from July of 2022 right there. So what happened this week is we broke that low. Okay, so there's that line from the lows, and today, this week, this is a defining close below this lows. We definitely made a new low. There's no question about it. So I think the gold will continue lower. This is deflationary in nature. As we just showed, the dollar is continuously going higher because Federal Reserve is tightening the monetary policy. By extension, it's pressuring commodities. Gold is a commodity. We're seeing gold move lower and lower. So how low will gold go? There is a pandemic low from March 16th of 2022, from 2020 rather. But as I just showed, the pandemic lows may not hold. So I'm projecting a move actually even lower. Quite good support is around this area, somewhere between 1,300 and maybe 1,200. So I think we can, gold could easily continue down around 20%. Not necessarily, in a straight line, but the direction is down. So I would act accordingly. And here's oil. So oil also is quite bearish. In fact, I have a position open right there on September 2nd. I bought puts on USO. So what does puts means? What does buying puts means? Puts means you're buying, you're placing a bearish bet. You think that something will continue lower, so you're buying puts to express that bearish bias. I did just that. Today, in fact, target for this move was reached. I sold about a quarter of my position, moved my stop to entry. I'm just gonna sit in the position, see what happens, because my puts are expiring in beginning of January, so not that far off. I mean, ideally I should buy puts further out, but I thought it was going to be a relatively short-term trade, which is actually turning out to be. So how low will oil go? Again, why is this happening? So deflationary in nature, oil dropping is not inflationary in nature, and we have Federal Reserve tightening the monetary policy. Dollar is increasing in value. Oil is also priced in dollars. So yes, this currency pair of light crude oil divided by US dollar is also pulling this currency pair lower. That's one way of saying it. The other way of looking at this is to say that Well, because generally speaking, things are slowing down worldwide. Yes, we had shortages, but now because the economy is kind of slowly but surely grinding down to not necessarily a halt, but it's slowing down, so less oil will be necessary in the future. And this is despite war in Ukraine, despite various European energy crisis and stuff like this. So clearly this is what's happening right now is that maybe there is no crisis in energy supplies anymore. So looking at the daily chart, we can't really see the whole picture, but if let's look at the weekly chart. So this is the weekly chart. Now for oil, if you guys remember, and we lived through the pandemic, this is the low, and notice where it was minus, it was negative. Okay, so this is important to remember when we get to Bitcoin, because light crude oil futures were negative at a certain point. Will it go negative again? Well, I don't know, but it did happen before, so I don't see why it can't happen again. Realistically, I think we have maybe this is a low from November 2021. It's a reasonable target. Very reasonable target is around $73, which is my yellow line. This is my kind of like a very good money-making target. But I think even more reasonable is 2021 lows around $63. So yes, somewhere between $70 and $60 is a very reasonable target. But I think it could actually continue significantly lower as well. So I would be on the lookout for pandemic lows, which remember was negative. And here's the Bitcoin. So Bitcoin, currency everybody loves to hate. I don't really care for it that much. The only reason I am trading it is because people like to trade it. I like to trade things. Same general principle. Looking at daily chart here, here's the beginning of a downtrend for Bitcoin in January of this year. Before that, we had no problem buying it. There's an opportunity to buy right there, 6th of October. I don't hate Bitcoin, I just don't care for it. Latest opportunity right there on April yielded well over 60% gain. So if you shorted it, for example, you can buy puts on a security called BITO, B-I-T-O. These are tied to actual futures of Bitcoin. So this is the reason, since this ETF is tied to the futures of Bitcoin, and I just showed you the futures for oil, and it went negative once. So once again, I don't see why it cannot go negative. The Bitcoin futures cannot go negative, meaning that somebody will pay you to take their Bitcoin off your hands. Okay, so here's the Bitcoin on daily, or rather on weekly time frame, and I'm gonna try to zoom in a little bit because it's kind of hard to see. So this is the situation right now. The lows from June are super close. I drew this purple line in. We're testing this line as we speak right now. If we break below it, I think we can collapse, and I think at that point we could go to zero, but maybe even negative. Once again, because of the potential influence of the Bitcoin futures. Will it happen? I don't know. It's possible, but I think the downtrend is intact for Bitcoin, and this looks just bad. I think the support will give. If the support will give, we can see like a waterfall event, just a collapse kind of thing. All right, head over to MasterChartsTrading.com, click on sign up and sign up for one of the products. So the trading indicators I just showed you, these lines on the chart, again, you can trade pretty much any security. S&P 500, you can trade ETFs, stocks, etc. It's pretty straightforward. I can explain pretty much everything. I have instructions, and there is a training library as well, training library of videos. News and the trading indicators are available for TradingView.com. And this is the TradingView.com interface. So once you sign up on MasterChartsTrading.com, my site, I will open the door for you on TradingView. If you want newsletters, for example, this week I'm going to be covering all of these various stocks: Biotech, Brazil, American Express, Blue Apron, Baidu, Sunrun, Black Power, Lululemon, etc. So we're trading all of those stocks as well. That's a newsletter. You can sign up for that. I think the best deal is to sign up for both trading indicators and the newsletter. And also I have a VIP access for which you get 60 minutes one-on-one Zoom screen sharing session per month. So consider signing up for that. With that, thank you for watching. Again, please don't forget to hit the like button. Again, this is the reason why people see. If you hit the like button, more people will be able to see this video. Of course, share this video, repost it, and if you have a for example, Twitter account or Facebook account, you can send me a message and we can talk about promotions opportunities too. That's it for this week's recap. Thank you for watching and have another great trading week. Bye-bye.